all property and finance questions answered. Here we are today, Gadev and I. Hello.
Hello, how you going?
On our weekly episodes, Thursdays, 3 p.m. Hello to everyone coming on. And the topic of discussion today is actually the questions that we've received from you guys over the last couple of weeks, based on what's happening in the market in terms of finance, property management, sales. So we're going to be touching a few of those. As you are coming on as well, you're welcome to send us your questions. We will go through as many as we can while we are live, and even afterwards, would be happy to answer them as well. So just to recap, Paris and Bazcast is dedicated to answering your questions. As you would also know, this is our season 2. So we had season 1, which was in the office in the good old days, when we could have people in the office sit with us, and all guest speakers and industry specialists talking about a number of different topics that impact property management, sales, and finance, the 3 services we provide. So season 2 has been all Zoom related.
And also, if there's a topic you guys want us to discuss, do let us know as well.
Absolutely, and we'll find the right buyer. Oh, not the buyer, the buyer. Find the right guest speaker to come and talk to you about that as well. So we have just launched, as of last week, on to Apple Podcasts, Spotify, Google Podcasts as well. So you can enjoy this and listen to it in your car, or when you're out and about and not wanting to watch the video. You've always got the option of doing that as well. So please make sure you subscribe and leave your reviews there too. So without further ado, let's get started on the top 5 questions that we have received. So hello to everyone coming on Instagram as well. So these questions are from our audience, mainly at Facebook and Instagram. First question, so for you, Gadev, is it worth getting a bridging loan in the current market? That's from Amy from Facebook. Thank you for sending us that message.
Yep. Well, that's a very commonly asked question. In today's market, I would say bridging finance is you should probably go for it if you can get it. What is bridging finance? Basically, it allows you to purchase a property without you selling your existing property. So basically, stock is tight at the moment. So if you found something that you like, you can pay a deposit, and in the meantime, sell your property. Normally, the lender allows you 12 months to sell your existing property with interest capitalizing on the loan, and you pay that at the end of the 1 year, or you can pay a monthly. So normally it's at the end of the term. Now, they normally give you 12 months to sell your property. If you do not sell your property within 12 months, then the bank does get involved, and they can come in and repossess the property and sell the property on your behalf.
But based on what's happening in the market at the moment,
I think selling property in today's market, it's quite easier than before. Stock is tight at the moment. There's more buyers out there. There's a buyer backlog. So yes, bridging finance, if you guys can get it, it is advisable. Now, it comes down to which lender your existing loan is with as well, because not all banks offer bridging finance. So you got to make sure that your existing lender can offer you the bridging finance, and also if you have enough equity buffer in your existing property, which allows you to get the bridging finance as well. So there's a couple of boxes that need to be ticked before you can get the loan, the bridging finance loan.
There you go. So definitely get in touch with us to discuss your individual circumstances.
And also on top of that, interest rates can slightly be higher on the bridging finance, because the interest is getting capitalized on top of the loan. So
you're paying 2 loans, basically. 2
loans, basically. So the longer you don't sell your property, the more interest which will accumulate over the period.
But once your property is sold, and given the way that the market is at the moment, it is selling quickly.
Because what we have seen also is some of our clients, they've sometimes sold the property and they can't buy another property, so they're out of the market. And prices are increasing every day. So you don't want to be in that situation where you've sold and you're losing properties and
Yeah, so I would talk about that in terms of the trends that I'm seeing in the rental market as well. So stay tuned. Perfect. So I've got a question here from Zabi. Where do I need to study to work in real estate or property? So your the main industry body governing real estate work is Real Estate Institute New South Wales. They have a number of online courses as well for you to start with a certificate of registration, then make your way up to be a licensed or license 2 holder. All of those details are on Real Estate Institute New South Wales website, so definitely recommend you reaching out to them. That's where we got our qualification as well. So definitely reach out there. And yeah, any other questions while we are live, happy to answer as well. So feel free to send them through. Second question, again, to do with mortgages. So this is from Priya from Facebook. Thank you, Priya. What are the common out-of-pocket fees associated with a loan? And I've added another one to it to make sure we cover both aspects. One, when you're refinancing, and the other, when you are when you're purchasing a property and you're getting a new loan.
Normally, when you're purchasing a property, if you've got a 20% deposit, so there will be normally no lender's mortgage insurance involved, which is mortgage insurance. So if you have a 20% deposit, the other fees that would be applicable are the mortgage registration fees when the mortgage gets registered under your name. Sometimes the lenders do also charge a settlement fee as well. But other than that, normally there's no application fee with the majority of the lenders. It will again come down to which lender you're going with. They're the commonly fees when purchasing a property. When refinancing a property, normally there's a discharge fee of $350, which is pretty standard across the board.
So you pay that to the outgoing lender?
Outgoing lender. And then there's a registration of the mortgage with the incoming lender as well. So there's that fee involved as well. But with refinancing, normally also depending on which lender you go, there's normally cashbacks involved as well. So that cashback, whether it's $2,000 or $3,000, normally covers the fees when you're refinancing your loan. So normally it covers the out-of-pocket expenses, and you've got money in your pocket after you've done the refinance.
Okay, so it's better to refinance in terms of fees.
But you can only refinance after
once you have a loan.
So
exactly.
You gotta go. And also when refinancing, also you got to make sure is that if the loan is fixed, is there any break cost involved from the outgoing lender? If it is fixed, then you got to see the cost and benefit. Sometimes it is worthwhile sometimes to break a loan to refinance to get on a cheaper rate with another lender, and you recover that cost over 1 or 2 years depending on the loan size and the amount as well. And also, if you've paid LMI initially on your loan and you're refinancing, you got to make sure there's enough buffer in the loan. In the property has increased in value, that you got 20% equity in there, so you can refinance without paying LMI again.
Okay.
So otherwise, you'll be paying lender's mortgage insurance with the other lender again.
Okay.
So you got to be careful with that. Sometimes paying lender's mortgage insurance can be beneficial if you've already paid it initially when you borrow 90 or 95% from a bank, when you're doing a top up with that existing lender, because you normally get a credit for that mortgage insurance that you've originally paid. But if you go to another lender, the mortgage insurance will be charged again.
Okay.
A bit technical, but yeah.
Yeah. So again, happy to answer individual questions there as well. So we've got another question from Zabi. How long would it take to work efficiently in real estate? Do you reckon I would do this through TAFE? Look, yes, TAFE is another avenue to consider. Roughly, I think they're allowing about 1 year, but again, all those details, you want to make sure that you're getting it from industry bodies, so realestateInstitute.com.au. They'll be able to outline the pathway to be able for you to become an independent agent and to be able to list and sell property. So because currently when you are doing just a certificate of registration, which is your first step, you can't actually sign on the agency agreement to represent, to be able to sell or rent out of properties. You need another licensed agent to be able to do that. So those things that definitely can be answered through Real Estate Institute for that. Now, third question from Jiga from Instagram this time. Do I have enough equity? How do I know if I have enough equity in my property to buy an investment property?
Yeah, that's another commonly asked question. The only way we can find out is when we order the valuation through the lender. So we can sometimes order 2 or 3 valuations with multiple lenders, see where we get the highest valuation. Different banks use their own valuers. So obviously the higher the valuation, the more equity we can take out to buy the other property. But also you got to look at the interest rate and the overall terms and conditions of that lender as well.
Does it cost to get the valuation?
Normally, the major banks, the valuation, there's no valuation fee.
There's no
so
valuation
that's covered
fee.
by the lender. But going to the second and third tier lenders, sometimes there are valuation fees applicable.
So say you own a property and you've only got 50% of its value, on loan remaining. Yeah. So you've got that 50%, which can be used as a deposit to buy another property.
See, that's where the misconception is. Normally, if you've got a 50% 50% mortgage on your existing property, normally you can go up to 80% without paying mortgage insurance, or you can go up to 90 or 95% paying lender's mortgage insurance. So you can't go to 100%, you can't fully gear the property up to 100%. So the lender has to have some equity buffer in the property when taking out equity when buying another property.
Okay, there you go.
So yeah, that can only be determined after ordering the valuation with the lender. And then we do the calculations and the borrowing capacity, which is another commonly asked question, which flows on from that.
Yeah.
How much can
I borrow?
And then what are the monthly repayments? And obviously then loan restructuring as well.
So we were talking offline about how much you can borrow versus what the actual repayments come up to be, which sometimes comes as a bit of a shock that yes, you can borrow $1 million.
When we talk with clients, they say we can say you can borrow, for example, $1 million, and when we tell them the repayments, they get a bit taken back. That it's quite a significant amount. So you got to see how much you can borrow. That's very important. But also, are you comfortable in making the repayments? With your daily living as well.
Based on your other expenses. So don't recommend you being
so you got to do the full analysis.
Absolutely. So Kate on Facebook, I have applied for so many properties but keep missing out. How can I make my application stronger? The key things that we are seeing at the moment. The rental market is strong. Very strong. And there are a bit of an anomaly right now. What we are seeing from anecdotal feedback on the ground from those that are coming to our inspections, to our rental property inspections, what they're telling us and what we're seeing is that two things are happening at the moment. One, those that have sold a property and haven't been able to find the property that they want to upgrade to are now wanting to rent out for a year. And so there's that artificial inflation of those people, those tenants coming into the market actively looking for properties. Then there's a trend for a number of investment properties that are likely to come on the market in the next 90 to 120 days. So these are tenants that have received a notice from their landlord that says, look, I'm going to be selling. I need vacant possession before I sell this property. So please, provide us vacant possession so we can sell the property. So there's a lot of those tenants that are coming out to inspect these properties because they know that their owner is going to sell by the end of the year.
So stock is tight on the selling front and even on the rental front, which is quite different from last COVID during last year.
Yeah.
We saw quite a bit of movement around. So
absolutely,
stock is tight in the rental market.
So we are, for example, for one property, rental property, for example, we had in Schofield, we had 22 applications to go through. So this is again the difference now between the inspections we're currently doing versus what would normally happen in an open home. A typical rental property inspection goes from 15 to 25 minutes, and a number of people go through, walk in, have a look, and obviously multiple people going in at one time makes it a lot quicker. But now that it is one-on-one inspections, we are spending anywhere from an hour to an hour and a half, allowing to make sure that these people that are interested have their own designated 5 minutes inside the property to be able to go and have a look, see it properly, and so on. So there is that much interest. We've got that many people that are coming in to see these properties, and then when the applications come through, there's a lot for the owner to choose from. Now, some of the things that we have seen that are currently working. So, for those of you who are looking at renting at the moment, what are some of the other tenants doing, applicants doing? Is that they're offering rent in advance. So if you can offer 1 month, 2 months, 3 months, 6 months rent in advance to be able to make your application stronger. Because remember, the owner is looking for, hello, Sandy. Hello. The owner is looking for a tenant that can ensure that they've got track record of making payments on time, and B, look after the property. Some of the things that the applicants that are doing, so to show if they don't have a rental history and they're wanting to show proof of the fact that they have been meeting their regular payments, they're attaching their loan account statement to show that they've been paying their, they've owned a property before, they don't have a rental history. So there's your loan account statement showing you've been paying regular payments. And then even to the point of how they're looking after the properties, I've had video calls with some of these applicants showing me how well their gardens are looked after or how well their property is.
You got to do whatever you can, because when we're receiving so many applications, you've got to see who's got the edge over the other. Sometimes it's very hard to.
Yeah, exactly. So who would be, it's the landlord finally making the decision. But these are the kind of things that make it easier. So even the other thing that I would suggest is talking to the agent, showing them, like, if you've got a deadline coming up because your settlement's approaching and you haven't been able to find a property, having a conversation with the owner, the agent, asking them, what will it take for me to get this over the line, because I've got a deadline to work with, always has helped it with our instance as well, because we can identify, okay, look, these, this is the situation, this is the scenario, who can move in the quickest. That's the other thing that the owners are looking for, the person who can move in the quickest, to avoid that vacancy factor in between two tenants, in terms of the payments, paying, more than what is being advertised is becoming so common as it is. And just building that rapport with the agent to explain your situation would be the recommendations that I would put forward. So thank you for that question, Kate. And lastly, the question, one of the top 5 questions that we received for this week is, so this one's from Michelle from Instagram. So I am a landlord and my tenant has lost more than 25% of their income despite the government assistance. Now, I don't pay land tax. Am I eligible for any assistance from the government? The answer is yes, you are. So there's 2 ways that you can get government assistance. One is if you pay land tax, there's that can be claimed through your land tax payable. There's a reduction there. The second is through New South Wales Fair Trading. If you have, after the 14th of July, if you've agreed with your tenant a reduced rental amount, you can claim up to $3,000 per property. This was $1,500 up until last week or so. Now it has come up to $3,000 per property. So so you've got to be able to have shown that you have waived the rent for that amount to be able to claim that as a payment that can be applied, that can come even in your agent's account. So your real estate agent can apply this on your behalf, and there's got to be a form to be filled out between the land agent and the tenant. This is the reduction in the rent, and that's the proof. And obviously the proof, you've got to be able to show that the tenant has suffered loss even after the government assistance. You can help your tenants out in that way. So I highly recommend any landlords.
Plenty of assistance available out there.
For as long as we can. So look, our government's doing as much as they can to be able to support the sector. So thank you very much for all these people that have sent us these questions, and please feel free to send us as a private message, email, or even just on the comments here any other questions that we can answer the next time round as well, or even it helps us formulate what other guest speakers that we can get in the upcoming episode. So this is something we do every Thursday at 3 p.m. online. It goes on all of our social media channels, and then it also gets converted into an audio and published on our podcast channels as well. So Apple Podcast, Google Podcast, Spotify. Please check us out there as well and leave your review. Any final words before we
next week we've got Kamsan Raja talking about debtor finance coming in, so that will be an interesting topic. A little bit different to the normal residential commercial finance. So stay tuned for that.
Stay tuned for that one. Perfect. Thank you very much for watching, guys, and we will see you guys next time.
See ya.